Hi, I'm Victor. In this video, I'm going to evaluate a company that I've invested in that is in the healthcare industry. They're an insurance company that people buy their healthcare benefits from. The company is Elevance Health, previously known as Anthem. They changed their name a year or two ago, and now they're called Elevance Health. I've owned this stock for about a year and a half, 2 years. And previous to this company, I owned United Healthcare, but decided to sell that stock because the price had gone so high that I felt like it was way over its intrinsic value and felt that there was better value in this company. They just announced their earnings for the full year. I've taken that information and I've analyzed it. I'd like to show that to you. I like to scorecard my investments and ask myself 4 questions about a particular stock, which would then lead me to a decision to buy more shares, hold my position, or sell my position. First question is, do I want to be in that industry? Is the company operated and performing well? Is debt less than 3 times EBITDA? And I want a discount on the stock so I can expect my investment to go up in value. Based on those questions, I'll either buy more shares, hold, or sell my position in this company. Elevance reported their full year financials just a week ago, and I wanted to go over a few highlights and then their financials. First, they grew their revenue. That's really good to see. I like seeing the growth in revenue. The top line grew 13.7%. Their operating gain, their profit, also went up almost 13%. They had their enrollment go up. So that's good. They have more people that they're going to be insuring. And their quarterly dividend was increased. Now, not a whole lot to celebrate. They pay a 1.2% dividend, but it's good to see that they increased it. And the diluted shares went down. That's very good. That means that each share that remained is a little more valuable. That's good to see the company's buying back shares. Now let's look at the full income statement. Again, total revenues went up and expenses also went up, and they actually went up in greater proportion than the revenue. So that is one concern, that their expenses might be a little too high. So it'd be nice for them to start controlling expenses. All right, let's take a look at their balance sheet. Their balance sheet overall looks good to me. A couple of highlights. Cash position really went up. Overall assets went up. Their debt hasn't been climbing a whole lot, even though their revenues are increasing. Current portion of long-term debt went down 99 million, and their long-term debt went up about 800 million. Now let's take a look at the statement of cash flows. The statement of cash flows is my favorite statement because that's really I use for my valuations. And it looks like from 21 to 22, the cash from operating activities was very consistent, went up a little bit. And then purchases of property and equipment went up about 70 million. So again, consistent. So their free cash flow is $7.2 billion. If you'd owned Elevance for 5 years, you'd be happy. It's gone up 106%, and it's paid a very small dividend. But I think that appreciation is very good, considering that in 2022, a lot of stocks were hit hard. This one really kept its value quite well. The 1-year chart on Elevance is quite interesting because you have a lot of up and down action trading within a range. So, up and down to me is good because I could buy in these low points and really just continue to add shares. If I want to add more shares, it gives me an opportunity to buy. I value companies based on their free cash flows and discount those expected free cash flows to today's value using a discount rate and using growth rates that I expect for the company. It all starts with, the free cash flow that we calculated just earlier. Taking that free cash flow, I'm going to grow it years 2 through 4 at 10%. They are growing more than that, but I think 10% is a good factor. Then long-term growth of 4%, and then discount rate of 8.3%. Based on those factors, I calculate that the intrinsic value for Elevance is 183 billion, but the market cap is 118 billion. So it offers up a nice 56% discount on an insurance company, a very stable industry. I really like that. Their balance sheet is in good shape. Debt to EBITDA is 2.77, below that 3x number that I'm looking for. All right, quick review on ELV. So overall, the performance has been good. Good revenue growth. They acquired Cigna a few years ago. They've integrated the company well. They produce great free cash flow and pay a small dividend. The stock price swinging is a concern. You know, why isn't it consistently going in one direction? So that is one concern I have, but it does offer up really good entry points to buy the stock. 2023 guidance, I believe they're going to grow about 10%. It's a good stock to have in a recession. People have, you know, healthcare is a necessity. People will keep their healthcare. They'll trim back on other things on their budget, but their healthcare, they will keep it. So it's a good recession stock for me. And I expect they're going to generate really good free cash flow. Overall, long-term, good stable industry and a very good stable company that produces great free cash flows and has a really solid balance sheet. So let's take Elevance Health through the scorecard. It's an industry I want to be in. This is the one healthcare insurance company that I own. Really good to have them. I have a significant position in this company. It's operated well, performing well. Balance sheet's in really good shape with less than 3x EBITDA, debt to 3x EBITDA. And a really good discount is available on this stock. Therefore, I'm buying additional shares of Elevance Health. Thank you for watching the video. I hope you enjoyed it, found it interesting, and found something new about Elevance Health. Keep in mind, I'm not recommending you buy the stock. I like sharing my experience as a small investor in Elevance Health and sharing with you my analysis and my point of view. Please comment if you have an opinion on Elevance Health, and it'd be great to collaborate with you. Good luck investing in 2023.